Hey, welcome to this channel. Now, if you have been following us, you know that we are running a series on different investment strategies, the best investment strategies that you can employ to attain your various financial objectives. Whether you are approaching retirement, whether you're working towards your retirement age, whether you are still young into employment, but you want to attain financial freedom. We are running a series of different investment strategies, and in today's episode of this series, we shall be discussing the income investment strategy. If you're here for the first time, my name is Belin. I am a banker. Please press the subscribe button and press the notification bell so that YouTube can notify you whenever I upload any new video. I upload videos on money matters, finances, treasury bonds, money market funds, SACCOs, and a whole wealth of information that will assist you to attain financial freedom. Now, if you are wondering, I have told you in this video we are going to be discussing income investment strategy. So what's income investment strategy? This is the strategy where you build a portfolio of assets that periodically generates for you income or generates for you cash flows. It's more like buying a machine, a money-making machine that you just sit back and money just drops in your sitting room, figuratively. It's like investing in a money minting machine. I know you're about to tell me there's no get-rich-quick scheme. I'm not talking about the get-rich-quick scheme. I'm not talking about the pyramid schemes. I'm talking about actual investment in income-generating or cash flow-generating investments, right? This is not the necessary investment in stocks where you buy and sell after it's appreciated in value. This is not growth investment. This is not value investment. I'm talking about income investment strategy. So how would you go about income investment strategy? Or why would you want to adopt this strategy? This strategy is beneficial, especially if you are in employment and you want to generate an extra stream of revenues. You want to be having your 9 to 5 job, and as you receive your salary from your employer, you are also getting extra income from your other investment without having to go through the trouble of you have a side hustle and you're wondering how you're going to manage that side hustle together with your 9 to 5 job. This is the strategy that you adopt when you're planning for your retirement journey. During your active employment, you have this salary that you expect at the end of each month, which is also not guaranteed. Remember, I told you in the other video that you can wake up having your pay slip and you go to sleep jobless. So this is the strategy that you employ when you want to cushion yourself from any unforeseen job loss. It's the strategy that you employ when you're working towards your retirement life, your post-active work retirement, right? So how would you get started? How would you get started in this strategy? What do you need to do? What you need to do is create a portfolio of income generating assets, of cash flow assets. This can be short-term or long-term, but best if you have a mix of variety for both short-term and long-term. Short-term to cushion you from unforeseen job loss, to meet your short-term objectives. Long-term to cushion you from, not to cushion you per se because you cannot save yourself from retirement, but to help you in your retirement life, post-retirement life. So you need to have a portfolio of both short-term and long-term life. So how do you create this portfolio? Let me know in the comment section if you have an idea of how to create a portfolio of your money minting machine. I'm not talking about pyramid schemes. In this portfolio, part of this portfolio is going to be what I love talking about, Treasury bonds or corporate bonds. I don't like corporate bonds though, per se, because of the risk element involved in them, especially if you're going long term. Companies can be mismanaged. We've seen companies going under. So I really don't have my risk appetite for corporate bonds is like this. You can barely see it. I'm not a fan of corporate bonds. Let me paraphrase. However, if you find that your risk appetite can accommodate corporate bonds, go for it. That's a source of revenue. You can have it in your income investment objectives, and they pay very good coupons or rates if you can accommodate that. But I am an advocate. I am an advocate of Treasury bonds because I find them having very minimal risk. Yeah. So Treasury bonds is where you lend the government money through CBK, and then the government pays you coupon every 6 months. Now you can use what we call bond laddering, such that every month you earn money. You earn money from CBK. When you start investing in the bonds early, you don't need to be using lump sum amounts for you to be earning sustainable income. When you start investing in bonds at your early years, say immediately you're employed, because the minimal amount you need is just 50K, right? You can save up and you buy these bonds and you keep growing your bonds portfolio You'll get to a stage where every month you earn sustainable income from CBK or from your central bank, depending on whichever country you're watching from. Treasury bonds investment, high yield bonds, go for the high yield papers, right? Now, you can also earn in your income investment strategy, you can also have good dividend paying stocks. Remember, in stocks or in shares, we have the growth stocks and we have the dividend paying stocks. Locally, some of these good dividend paying stocks are things like KCB, EABL, Absa Bank, and so many other banks. But I'm not telling you to go and pick those stocks. Do your due diligence and pick the stocks that are aligned to your risk profile and are aligned to your investment objectives. Now, outside Kenya, for those who are watching us, those who invest across the borders, yeah, McDonald's, Coca-Cola, and Vanguard, and so many other shares and ETFs that pays good dividends. So you need to have a good portfolio of dividend paying stocks if you want to be having regular cash flows. Another thing to add into that portfolio is rental property. I know I've not talked about rental property in this channel, but you can have a good portfolio of rental property. You'll ask me, Berlin, but I need a lot of money to start earning income from property. We have what we call REITs, Real Estate Investment Trusts, which is a group of people coming together to invest in this rental property, and you have somebody else managing this property on your behalf. Kazi yako tu ni kupokea pesa when they share out their profits. In other words, you have somebody else managing, acquiring the property, constructing it, renting it out, managing the rent, collecting the rent, managing the property, the cleaning, security, and everything else. And then at the end of the year, once they have made profits in this property, they come and share with you this property. And REITs are obligated, by the way, to share out their profits with the investors or their shareholders. So REITs allows you to own a portion of a property So yes, you don't need to be having millions for you to earn cash flows from real estate. You can either go into it as an individual if you have the capital to do it and you have the time and the risk element of it. You can go into property and construct or buy rental properties that will be earning you regular income, or you can still invest in real estate and earn constant revenues from this real estate investment using real estate investment trusts. People have asked me about VUCA. You have your answer. Now, you can also earn in your income investment portfolio, you can also create online products or digital products that will be earning you money consistently, even when you're sleeping, by the way. Even when you're bedridden, you are in your old age and you're on a wheelchair, you can't do anything. The digital products that you had created years back will still be earning you revenues. What are some of these digital products? Payroll, a payroll system, a healthcare system, a budgeting tool, a calculator. You see these products that you pay for online, even games, right? Candy Crush. I can't remember when Candy Crush was created. I still see Candy Crush being advertised here. Some of these online games, those people created them years and years back, and they still continue to earn income from them. So you can create a portfolio or an online digital product which will be earning you revenues years later after you had created these products. You can publish a book and have it on Amazon. As this book is bought years after you had published it, you still earn revenues from it, online or digital products. We are discussing income investment strategy. So there you have it. So that is how you employ the income investment strategies to make your money work for you as you do other things, right? This is also what we call passive income. Now it's your turn. Which of these income investment strategies, which one of these would you want to try out, or which one of these do you already have? Let me share with you one that is working for me already. This, I received the message yesterday. Money has been credited to my account from my investment in Treasury Bonds. So yes, I was just sleeping and I received the message. That is passive income. I didn't do anything. The only thing I did was investing with CBK back in 2022, by the way. And I have been receiving these messages every so often. Income investment strategy. Even in my retirement, I'll still be receiving these messages. If God forbid that I die now, these messages will still be coming for my children to enjoy. Income investment strategy. Which of these one would you want to try? Or which of these ones do you already have? Do you have a digital product? Do you earn dividends already? Do you earn coupons from CBK? Oh, you can also earn dividends or income from your SACCO savings. Yeah, so even SACCOs, you can add it onto that portfolio, especially if you want to have access to loans. You can add SACCOs. You can save with the SACCOs and earn dividends from your shares or earn interest from your savings. Now, the next strategy is also going to be as interesting as this one. And remember, I told you, you can employ this strategy. You can use this strategy individually or concurrently. Okay? Let me know in the comment section which of this strategy you are using or you want to try using. And see you on the next video.